Good morning, everyone. Paul Duncan here with GammaEdge. Today is Thursday, the 3rd of March. Let's go ahead and get right into it. So our summary for today, improving but cautious. Short term, we had a linear up situation on the cumulative tick yesterday. This lasted until about 2 p.m. and we did finish at the high of the day, which is constructive. So we're going to color yesterday a green day. We did see also some weak institutional buying, but that was positive also, even though it was weak. So again, we're going to color yesterday green. Medium term, breadth remains very, very weak. We're not going to see any upward movement here until, or any upward bias until we flip that, and it's just not happening in the short term. Just can't seem to break anything to free us and move up. Longer term, we're still bearish. We're improving, but we are bearish overall. On the ES, significant here is that negative gamma exposure for the ES, which is a single expiry, which is important because it gives us a fairly good early indicator of what's going on. It moved up significantly from 4,000 to 4,300 overnight. And we think this puts our BN open closer to spot price. People are getting ready to take advantage of a decrease. And so we want to keep an eye on that. All that being said, the spot price has moved above the zero. And when that happens, that typically can indicate that we're at a transition event. And again, we want to watch that. We would consider that bullish. So the movement up of negative gamma is to take advantage of a drop, and the fact that we're transitioning across to zero could be a good constructive thing. On the VIX and the VVIX, we're elevated above 30. Simply put, sell premium. And then on the SPX, we're still very much net negative gamma. We did improve slightly yesterday, which is positive, but I would still expect higher volatility. Introducing something new today. We have some modeling capabilities now with our partnership with EdgeRater. Some preliminary data there suggests that our 21-day modeling estimates show positive upside bias. When we take a look at the cumulative tick, we had this run up. We kind of consolidated for Tuesday and Wednesday, or excuse me, Monday and Tuesday. Wednesday saw this net positive, which is very constructive. We're still inside the historical turning points here, and we need to get out of this what we call the ribbons, and make significant progress. So watch for continuation there. I've highlighted the zeros here. We calculate different methodologies for the zeros, and I wanted to put these all out there for everyone. Where it's red indicates that they fell relative to yesterday, where it's green indicates that they've gone up. So we did see yesterday actually a fairly significant movement in the 0 and 1 DTE structures for the SPX. Why that's important is that that typically indicates that calls are being opened in the short term and that puts are being closed. So just keep that in mind, whereas we are seeing a drop in the zeros elsewhere. So I think there's a combination of things that are going on that we want to pay attention to. Not all the currents are pointing upward, and I think that's part of the cautiousness that we have. As I said, the ES is moving above one of our local zeros, and I think that's a fairly significant thing to watch here. We could be in a transition area, and it could push us higher as we go towards that 4510 JPM hedge area. As I said also earlier, the negative GEX, negative gamma exposure level for the ES has jumped up a considerable amount, and we think this is due to puts being open very, very close below the spot price. When we take a look at the GEXpiration, fairly balanced into tomorrow. So the 1 DTE, 0 DT action, again, is going to dominate. We saw it yesterday, a very balanced perspective. We ground up yesterday, and I think we're kind of in that same boat right now. Obviously, getting above 4,400 is going to be key here. When we take a look at tomorrow's 1 DTE, we do have a tighter range than we had yesterday. This is the single expiry, as you can see here, still net negative coming off on Friday, very small amount. I think that's, again, that the daily action is really driving the conversation here. The area that I boxed out here is where I think we could end the day. It's not necessarily the plain range, although you can see the 43.50 range to the downside has got a fairly strong dominant level for tomorrow's expiry, as well as the 42.50 level. I think that's important. The JPM area is up here. This isn't the JPM hedges. They don't come off until the end of the month, but I think it's important to note that we do have some put structures up here, negative gamma structures up here to be aware of, and then you can see where the dominant positive gamma lies as we go up. And these will be areas of liquidity that will most likely pause at as people monetize the calls that are below there. When we take a look at the SPX, net negative over here at circle 1, fairly strong. We did improve compared to yesterday, but I think we're still in a fairly negative gamma position until we're not, of course. I do expect the upside targets of 4,600 is a key level here. Down here it says 4,100. That is way off scale. I don't think we're going anywhere near that in the short term. 4,300 I think is the downside bogey that we need to watch here. Again, the square 6 area being a most likely area where we could finish at the end of the day. We could push upwards towards 44.50, of course, and we could also push down towards 4,300. I don't think we're going to be too drastic of a movement. I would say square 6 is a highly likely area where we would end. I want to call out circle 5 because that is the JPM hedge. That's where those long puts are sitting. There's 43,000 that were opened up at the end of December. They're getting ready to roll off at the end of March. And that is going to be an area which will become an attractor as we move up. As I indicated, we're able to do some pretty significant, statistically significant also, back testing now, looking at different gamma structures. We have created data in our partnership with EdgeRater to go back in time to 2013, and so we're able to reconstruct a lot of these structures and take a look at the probability of touch. Probability of touch describes statistics of price moving up a certain amount within a certain amount of time. So across the top here, I have various days. I have the number of observations for this test. So 1,233 observations were made in the existing gamma structure that we're in right now. And it shows that after 20 days, 21 days, that we have a significant chance of being at a higher 5% upside and a -3% downside. What this tells us is that we do have a bias upward. You can also see that this is a balanced scale between +18 and -18 at the bottom. And what that means is that when you see more red at the bottom than you see top, there's a lot less probability of hitting these lower numbers compared to hitting the upper numbers. This range here between the green and the orange is the 50%, what I call coin toss area. Between the orange and the red is the 10% touch. So think of a distribution with tails. 10% touch is up here at 16 some percent. 10% touch after 20 days is down here around 13%. So you can see that as time goes on, there is a probability of moving higher here. Note that this does not include a market timing model, such as the cumulative tick. So when we overlay the cumulative tick and take this gamma structure that we're in right now, we may definitely have an upside edge to play against. So that's it for today. You can reach us at GammaEdge.us. That'll take you to a sign-up page for our Discord. You get a 14-day free trial. All the tools are turned on. Great group there and very active. So come and kick the tires if you're interested. Additionally, you can follow us at GammaEdges with an S on Twitter. Thanks, everyone. Make it a great day, and we'll see you in the forum.